Good morning, gang. Happy Tuesday morning. All right, let's talk about something that's important here today. Let's talk about your money, all right? How to save it, what to do with it, what the hell's going on. A lot of you have emailed me. God knows it's all over the place. Gold and silver market is getting crushed here in the last week or so. I mean, if you saw yesterday, silver was just completely demolished. And between both of them, gold and silver, they're each down about 10% in a week, all right? That's significant. It's also a sale. Full disclosure here, I bought some silver yesterday at $21.50. May I have pulled the trigger just a hair early because this morning it looks, as of right now, about 6:45, silver's at $21.09. Okay, yeah, maybe I did, but premium got some stuff that was on sale, and okay, I'll take it. You know, I'm not looking to trade. But what's going on, and what can you do? What can you do? What should you be doing to protect yourself? Let's first understand the reason for everything that's going on. The dollar index is pushing 107 here. It's at 106 3/4. Okay, the dollar is the strongest it has been in nearly a year. And if you listen to the talking heads out of Washington, the politicians, they'll go, "Look how great the U.S. economy does. The dollar's stronger than it's been." Yada yada yada. Okay. Now, just so you understand how the strength of the dollar is calculated, it's compared to 6 other currencies around the world, and that's basically how they figure this out. So let's take a look at the significant ones in those 6 other currencies. Against the Japanese yen and against the British pound, well, let's see, those are at their lowest points since March. Okay, so we've got, what, nearly 7 months, a 7-month low for those. Let's look at the euro. The euro is at the lowest it has been since December. You want to take a look at the Australian dollar? It's the lowest it's been since last November. Okay? The reason the dollar is getting stronger, or looking like it is because the currencies around the rest of the world are collapsing. That's it. They're getting worth less and less and less and less, which, of course, that makes the dollar look better. Now, remember what I said. We're on the cusp of the world economy collapsing. I think everybody knows that. Every country is so far in debt that they'll never dig their way out. Okay? All the currencies aren't going to collapse. All the countries aren't going to collapse at the same time. It's a domino effect. One's going to fall, another. The thing is, the United States is at the end of the row of dominoes. Japan will collapse, Europe will collapse, Great Britain will collapse, Australia will collapse, and then under the weight of all of those, the United States will collapse. That's what's going on. Okay. So we look at gold and silver right now. Like I said, full disclosure, I bought some yesterday. Okay. But right now, gold and silver is on sale. If you look at the reason, and you can find this out on Kitco if you've ever looked at their website, okay, the reason the prices are going down, it's not because there's more sellers, it's because of the strengthening of the dollar. Now, if we know that the strengthening of the dollar is a facade, then we know that the drop in gold and silver is a facade. So what does that tell me? That tells me I want to be buying more here. Like anything else, you want to buy into weakness and sell into strength. That's how you actually do this, okay? You're not chasing your tail. Oh my God, everything's down. I need to get out. Fear, okay? Oh my God, it's going up. I need to buy. Right, okay? Buy at the top, sell at the bottom is a sure way of going broke, okay? That's the thing. So what should you be doing with your money? Now, some people don't want to get in gold and silver. Some people can't afford to get in gold and silver. I get that, all right? So, maybe you've got a little bit less and, you're trying to put it somewhere. Well, we've talked about bond yields and CDs and everything of that sort. A lot of you guys asked me about that. For the longest time, if you looked at where the best place to invest money in CDs was, it's been about 9 months, okay? Because the yield curve has done this. It's gone up and then gone down, all right? And what I mean by that is you could buy a CD and get a higher interest rate locking up your money for 9 months than you could for a year or 2 years or 5 years or 10 years, whether it's a treasury or whatever, okay? Which is not a good sign for the economy. It should go like this. The longer you go out, the higher you get paid. That's the sign of a good economy. This is not. Well, that's changed. And I looked this up just now, okay? The best rates you are getting on a CD right now are 3 months. That's it. Right now, you can get a 3-month CD for 5.56%. A 6-month is 5.52. A 9-month is 5.53. 1 year, 18 months, 5.55. So the longer that you're going out, the less you are getting in interest. That's not a good sign, guys. Now, why do we see this? Well, the Federal Reserve has come out and said that they can't get inflation under control, that chances are we're going to see more interest rate hikes. And what did I tell you? I said, I'll bet you we see 8% mortgage by the end of the year. That looks like a foregone conclusion at this point. One more interest rate hike and we're pretty much there, okay? Your credit card rates, your auto loan, everything going up. We know that the student loans that have been on hold for, 3 years now? Those payments just started coming due a couple of days ago. That's going to pull a boatload of money out of the economy that people were using that money to spend something else if they pay those bills. Or if they don't, that's going to cause a whole lot of defaults. You can't bankrupt yourself out of student loans, so that's not going to make a difference there. But people will default on paying the student loans. Okay, then you get that $1 trillion+ that's not being paid. That's going to affect the economy too. That'll affect interest rates because the government somehow is going to want to get their money back somehow. What will they do? They'll raise the interest rates on those that are paying the bills on time. This is the thing. Right now, if you've got money to save, that you should, all right? We've all talked about having 3 to 6 months worth of bills in cash in the house. Yes, I get put your money in tangible assets. Beans, bullets, Band-Aids, no question, all right? But there's only so much of that is practical to store. Gee, I've got 3 years worth of food. Gee, I've got 30,000 rounds or 50,000 rounds for my AR. I think you're okay, all right? Eventually it comes to the point where, where do I go? And, people say, well, buy land. Sure, okay? The problem is land is ridiculously expensive right now too. And it's not like a lot of people go, hey, you know what? I've got $10,000, $20,000, $100,000 to drop on a piece of land. No, they're going, I got $2,000 and I got to figure out how to do something with that. That's what I've got in savings right now. Sorry, when 2/3 of the country can't come up with $1,000 for an emergency, yeah, I think my figure of $2,000 is even being a little optimistic. So what would you do with it? Well, put some of it away in a savings account or something. I mean, like I said, you can tie your money up for 3 months and get 5.56 on a CD right now, no problem. You can put it in a savings account. I mean, on where I have my savings account, I'm getting 4.3% on my savings. Instant liquidity. I mean, I can take that money out any day. It's not tied up at all. I'm getting 4.3. I'll take that, okay? Am I keeping up with inflation? Barely, okay? At least according to the official numbers. But take advantage of some of these things and pay attention to what's going on. Gold and silver's on sale. It could go a little further. Watch it, but we're pretty close to where a bottom should be. I mean, unless we have utter chaos and then silver collapses down to $18 or something like that, but we should be pretty close to a bottom. Same with gold. It shouldn't go much It shouldn't hit 1,800 even, but doesn't mean it can't. Okay. Fixed income investments, CDs or treasuries or something. Yeah, those are good places to be. I'd much rather be in a 5.65 CD or 5.6 or 5.56 CD than I would being in the stock market right now. I mean, just as base point, average annual return on the stock market since the Great Depression, it's about 7% a year. If I can get just under 6 and take no risk, yeah, it's okay. So be careful with what your money is. Get out of debt. That is still the first priority. If you've got that done, you're trying to get that savings put up, that emergency fund that you need, whatever it is, find somewhere safe to put it where you can make a little bit of money on it. 5% on $1,000. It's not bad. It's, $50 a year. Hey, we'll take it. Okay. But just pay attention to this. Try to stay out ahead of the game. And, if you're in the fixed income market, no longer than 3 months on a CD. Okay. And pay attention to what the Fed does, because going into the end of the year, it's going to get crazy. Pinball out.